When most people think of investing in real estate, they chase markets like New York, LA, Toronto. But the problem is those markets are really expensive, they're overbuilt, and they offer lower cash on cash returns. Meanwhile, there's a massive opportunity playing out down south, and that's the Sun Belt. And so this is the next big opportunity that John and I are going to be diving into today. Now, if you're thinking about investing in real estate and you can't find any good deals, go to fulloutinvesting.com where you'll find our 10-step full out investing process. And we've also included a sample deal there as well to find out what a future deal with Faris Capital Partners will look like. John, it's great to be here with you.
Good to be here, Mark. I've lived in the Sun Belt my whole life, so it's been fun the past 8 to 10 years, just seeing the massive growth and the population inflows, and finally getting our due, so to speak. Having been in Atlanta pretty much my whole life, and the Sun Belt my whole life, outside of a few years in Chicago, we just got the best weather, and the economic opportunities are through the roof. So excited to dive in today.
Yeah. For me, we're in between. So right now we're spending most of our time in Naples, Florida. We have our real estate brokerage business north of Toronto, so in the Barrie area. And for me, when COVID hit, it was interesting because we moved a lot of our operations online. And I realized that, I could do my job just as good if I was online or if I was sitting in the actual office, based on us building our strong leadership team and whatnot. And it was really interesting because for me, it was like I could jump on a flight 3 hours and I'm back. And so what's really interesting is that I was not the only one to do this. A lot of people realize, especially with COVID, that they can work from anywhere. And if they're going to work somewhere, they might as well go somewhere that is sunny. It's great in the winter times. And so we saw a lot of business people move south, but not only business people, people that want to be able to, we'll just say, health is important to them. They want to enjoy their life a little bit more. They didn't want to be, cold all through the winter. And so there's a huge, not only from a we'll say immigration standpoint from other countries moving in, but also intermigration as well. So people moving from the north, south, say from California, so they're the west to the east. And so we're going to be talking why people are moving into some of these areas and where the investment opportunity is, John. Like, this to me is like, you just follow where people are going and it tells you a really cool story. And so that's our whole business plan, is to be able to find these pockets, find these markets. And what's really interesting is that there's always an emerging market somewhere. That was a big aha moment for me, is that real estate is very hyper local. And so you might as well go find the best market with the most amount of upside and invest your money there, buy buildings there. And if you can do that, nail down the right locations, you get ahead of the curve, and then you look like a genius when the market goes up really fast and you have a lot of assets sitting there.
Yeah, 100%. No, it's so critical you get the market right when you're investing, specifically in real estate. And, we're going to get into all the factors on why the Sun Belt is the most attractive market to invest in. But you nailed it, right? And it's so interesting because it creates almost like a cycle, because, the population starts moving. And I think originally, specifically during the pandemic, a lot of that migration occurred because a lot of folks had a very similar story to you. Maybe they found themselves, in a state that had stricter lockdowns, because I know Canada largely had very strict lockdowns across, all the provinces, generally speaking. But in the US, every state sort of took a different approach. And so, I had friends that were in California that absolutely loved it, but all of a sudden they're locked up, and the cost of living's increasing, this inflation occurred, and they started looking around. And so one couple I'm thinking of specifically moved back to Atlanta, and they're actually professional photographers, and they do like portfolio work for like major brands and, Time Magazine and New York Times. And they're like, the airport's right down the street. I can be back in LA. Yeah. I can be wherever I need to be. And, they're just really enjoying the lower cost of living and, being closer to family. And so, yeah, it's all about that population growth. That's really what started it. And so the population comes in, which then attracts more business, which then kind of compounds, right? And it creates that cycle. So I think reason number one, the Sun Belt is the best market to invest in, would be that. It's that population growth, because ultimately more people equals more rent demand. And when you have a huge influx of people coming in all at the same time, you saw a lot of new development in the Sun Belt, but you also saw that absorption kick in. And so there was a year or two, maybe say in 22, 23, where, headline rents, and I think it's important to talk about when you're saying an average rent growth in a market, that doesn't mean all properties, maybe said had a flat or slightly negative rent growth year. Usually it's just in that new development where they really feel it. But the point is that's all turned a corner, and now you're seeing positive rent growth in just about every market in the Sun Belt because interest rates increased, development stopped, and that rent demand is still not being met with all this excess population moving in. So, the Sun Belt is leading that migration, that in-migration within the United States. You also mentioned it's a popular destination for immigrants coming from outside the country. Half the people I seem to meet down in Naples are Canadian, right? So it's a
maybe not as much within the last few months here, John.
I get, yeah,
right,
I
what's
know.
going on?
Yeah.
But, there's still a lot of Canadians still coming down, mind you. But that being said, it
has changed a little bit, no doubt. And my hope is that all that is behind us soon because
That's right.
We're on both sides of the border as a company. You're Canadian, I'm from the U.S., and it's people, right? The politicians complicate things, but the people, we love Canadians, right? Most U.S. people I talk to love Canadians. It's the politicians, right? And so we try not to get too caught up in all that, right? But it too shall pass. That's my focus.
Well, and I think it's like anything too. There's Canadians that love it even more with what's happening right now. Yeah. So I think there's two sides for sure. But the amount of immigration, but then the in-migration, people that are saying, hey, listen, the state that I'm in is not a very strong state, and so we're going to be talking about why. And if we were going to say, okay, where are they moving to? Florida's a big one. Texas is a big one. Georgia. We love the Carolinas. Like Charleston's one of our favorite markets in South Carolina. North Carolina is strong as well. Arizona, Nevada, Tennessee, Alabama. These are all markets. And then, so those states that are very strong where people are moving into, and we track the data on this, there's then cities within those states that are really important that you do your market research on. And then there's areas or neighborhoods within the cities that are stronger that we would say be really interested to invest in. And then there's other neighborhoods we would say, listen, we want to stay away from that. Maybe it's a safety concern, or maybe there's a whole bunch of new inventory that is coming down the pipe in the next 12 months that is going to, we'll say, make it not a great market to be able to invest in as well. So you got to make sure that it's not only state where you just throw a blanket and say, okay, everything in that state is going to be good. You need to go hyper local to be able to make sure that you get the right locations to invest so that as the market grows or time goes by, that your asset grows to the fullest extent.
That's right. Yeah, it's really the sub-market, right? That neighborhood that you have to super dial into. But, cities like Austin, Nashville, Atlanta, Tampa, Charlotte, Raleigh, and Charleston have all seen just outsized growth that is just blowing the population growth trends in the U.S. out of the water, that average population growth. States like California and New York are seeing more people leaving than coming in. And so it's not to say there's not good opportunities there, but for us, if we're going to be betting, we're going to bet where we know we can win. And that's going to be in the areas where the population growth is net positive and the projections into the future. One of the things we look at, as you know, Mark, and when we're looking even at a sub-market levels, we're looking for the 5-year population growth projections in that specific area. We're looking at a deal now in a suburban market just outside of Atlanta that has an 11% population growth projection over the next 5 years. And in the prior 10 years has had a 20% population growth. And guess what? There have been no new buildings delivered in the last 2 years, nor any planned. So that's like a little hidden gem, right? And so when you find those markets, that's when you really get excited. So,
John, I want to just quickly hit on that point there. Is like, if you just think about it, because we have people that are moving in, and there's a large percentage of them that are renting. So that means that those are in multifamily and in real estate investing, those are our clients. Those are our clients that are potentially renting. They're going to need a place to live. And if you don't get new, we'll say new units that are coming online, that means that every year that goes by when new customers, and you only have a certain amount of supply there, and you don't add new supply, that means that the basic business rules is supply and demand. And if supply stays the same and demand grows, there's only one way that the market can go. Pricing will go up eventually as more demand happens if the supply doesn't grow with that demand. And I think that I just want to really hit on that point there, John, that that's one of the biggest reasons why these markets are really strong, because we track this and we can get ahead of it's just data. Follow the trail.
That's it. That's right. Yeah. Bottom line, more people equals stronger occupancy as well as that pricing power, which when I say that, I mean rent growth, right? So, what's been happening, and you kind of briefly touched on this, but the Sun Belt, remote work, we touched on that already, but retirees, right? So say you've had a full career, you've lived your whole life in New Jersey or New York, you love the city, you love, your lifestyle, but now you're retired and all of a sudden, the traffic's a problem, it's cold 8-9 months out of the year, 6-7, whatever the number. And, so they're moving down south. In fact, what's interesting is, a lot of people think of Florida, right? The snowbirds, right? We often call them, where, they're coming down from New York or whatever. But what's also happened is there's quite a few people landing in the Carolinas. So the Raleigh-Durham area, it's interesting. There's a little city there called Cary, Cary. And the joke in Raleigh is that's containment area for retired Yankees. So, what happened is Duke's there, UNC's there. And so a lot of kids come down there. They're fantastic schools. Duke's one of the top schools in the nation. And then they love it, so they stay. Well, then the parents are like, well, I want to be close to my kids and grandkids, so they're moving down there. So that's a little joke that they say in Cary, North Carolina. It's all the retired Yankees down there. Wilmington, North Carolina is another great example of that, in Charleston, certainly. But then you also add to that, it's, a lot of younger people, right, that just like the lifestyle that these cities afford. And bottom line is they're more affordable. So your dollar goes further. That's something I know you touch on a lot. And actually that presentation you mentioned there on the fulloutinvesting.com, it's actually a whole slide we talk about where, the difference between a $200,000 income in Charleston, say, versus, for example, Toronto or San Francisco, what you're able to buy or rent is just vastly better in a city like Charleston. So more square footage, more modern conveniences. And so people are making those decisions, and I don't think that trend will reverse anytime soon. And I think you'll continue to see more outmigration from the northeastern as well as the western states like California.
100%. And for context, you can buy a fully detached 1,800 square foot 2-story house for $400,000 in Tampa. You are going to get, for $400,000 in, say, Toronto, you're getting a little 1-bedroom condo.
Yeah.
It's like, come on. I mean, New York as well. I mean, you 400,000, they'll laugh at you. You want to go to Manhattan, it's like, what? 400,000 is like, so that's for context. That's why people are moving. And so you need to make $200,000 in San Francisco to have the same lifestyle as somebody that's making 100 or 105,000 in Charleston. Same house, same everything. You got to make double the amount of money. And so this is why you're seeing a huge amount of people move. And what's cool, John, brings us to the next point, is that when you have a lot of people moving in for affordability, the companies out there see that, and they track the same data you and I track, John. And they're like, if people are moving to these areas and it's affordable, and they can make half as much as, say, these other more expensive cities, that means that we can actually move our business there. We can buy land fairly inexpensive. We can build something, and we have a lot of new potential employees and talent moving in. And that means that we can come in, we can buy a place, we can pay less. We have new talent coming in, so there's more and more people that we can hire. So the talent pool is greater. We can get tax incentives as well, because a lot of these cities, John, I know you're really big into that, is in finding out what kind of government programs are being offered. And like these big companies, they're getting massive tax savings and incentives for moving their companies there. And so we're seeing massive job growth in these markets that we're buying in, which it's like this whole flywheel concept. First is affordability, population growth, and then you got businesses moving in, which actually brings more people down as well. And then we'll touch on the next one after that. What are your thoughts on that, John?
100%. I mean, gosh, look at how many companies have relocated headquarters to the Sun Belt. I mean, I think Tesla moving to Austin, Texas from California is one that everybody would recognize from the headlines. You know, Texas has no state income tax, so for a wealthy business owner, it makes sense to locate your business there. One of the realities too, and it is what it is, but a business looks at a city like Atlanta and a city like LA, and they say, we can actually potentially pay a little bit less for the same talent because the cost of living is lower. In fact, I remember during the early days of the pandemic, Google and some of the tech companies said, "Hey guys, like if you're moving out of Mountain View, which is outside of San Francisco, to move to Charleston, that's great, but we're going to actually give you a pay reduction because part of the reason you're paid what you're paid is because you live in San Francisco." But Oracle, Google, Meta all have buildings now and major presence in Nashville. Charlotte and Dallas are huge financial hubs. Like Charlotte is like a mecca for banking in the United States. Bank of America, Truist are located there amongst many other banks. And look at Atlanta, Mark. 16 Fortune 500 companies have their headquarters here. Home Depot, UPS, Delta, Coca-Cola, and the Newell brands just being a few examples. So more jobs, once again, equals more renters with stable income. And so one of the factors we look at is the unemployment rate in any of the markets. And we're looking for an unemployment rate that's below the national average. So many of the markets we're looking at, the civilian unemployment rate is 1.4 to 2.4%. We're nationwide when we record this in mid-April 2025 is about 4.1%. So, there it shows once again that not only do you have all these great jobs and all these prospects, but they're more employed in these states, right? So we love that.
Yeah, no, it's really, really important. So we got population growth, which is good. You got the businesses there. I'm going to dive in a little bit more about this affordability. So we talked about the house. You could buy, a 4-bedroom, 1,800 square foot, 2-story in a city that we're investing in versus like a little 1-bedroom condo in a more expensive city. But when we say affordability, to give you more even further context, we like to buy in areas that on average, let's just say the average income is $100,000. We like to buy apartments in areas where the average rent of the building we're buying is 30% or less of the average income in that area. So if it's 100,000 is the average, just to make it easy, that the 1 year annual rent that a resident would be paying on the building is $30,000 or less. Now, we may go up to 35%, but we like to be 30% or under that for a renovated. Once we renovate the units and we increase the rents, it's got to be 30% or less. For context, Toronto in Canada, the average income to rent ratio is 60%. The average rent to income ratio in New York is 70%.
It's unreal.
And so for this, I'll share a quick story to give you context. I was getting my hair cut, and there's this lovely lady cutting my hair, and she came down from Rhode Island a number of years earlier. She was like 3 years, I think she was living in Florida. And she said, "Mark," with her accent, she said, "Mark," I'm not even going to try to do the accent.
I was waiting for it.
I was like, "Rhode Island?" I'm like, I knew there's an accent. I'm just going to come out like Italian or an Irish or a Polish. I never get my accent right when I'm with Joanna. Anyway, so she said, "Mark, if I would have moved down 10 years earlier from Rhode Island down to Florida, I would have been retired now." And it was just a little bit heartbreaking because, she's standing there cutting hair and she's enjoying it. But at the same time, she's doing it, I know, because she has to, not because she wants to. And the affordability side of it is a big, big part of that.
Yeah. That's right. One of the deals we're looking at now is in a market just outside of Charleston, and it is a major hub for retiree relocation because, it's just more affordable, right? And people are on a fixed income, and with inflation, they're having to stretch their dollar further. So, yeah, it's a real thing. I mean, I have a friend who lives up in Maine, and it's interesting because, it's a smaller state. There's a lot good going on in Maine, but it's not like an industrial or manufacturing powerhouse, right? But what's amazing is they have all these like moratoriums on multifamily. So a lot of people moved to Maine actually, leaving New York during the pandemic. And he's like looking at real estate values, and they're just like going up like 50, 60% in a few years. So it just goes back to there's just a lot more opportunity for those with fixed incomes, the retirees we're talking about. But gosh, think about a young professional just getting started in their career, and they're in New York and they're spending 70% of their income. Now, if we're looking at average incomes, I mean, the tax man's taking the rest. So, what do you even have left over, right? And, occasionally I'll see on like Instagram, Mark, it's like, here's an apartment in New York and it's $3 million and it's a studio where your bathroom is next to your bed, and you're just like, I'm sure there's things about New York and people are excited to live there. And I don't think it's going to get any less popular. But for me, man, like I like my big old, house on 2 acres here in Atlanta that I bought, for a very affordable price, a number of years ago. So,
No, for sure. Yeah,
yeah.
and that's what's forcing people in those big cities to live outside the city where something that they can't afford, and then they got to drive in and out. And so, you stack that with the ability to have zero state tax or very, very low state tax, and people are able to keep more money in their pocket. And so why this is so critical is that when we go into a market, if people have more money still in their pocket after paying all their expenses, it means that as we go in and we do our 28-day transformation, so we go in and we take an asset over and we change the property manager out, make him somebody friendly, make sure that all the grounds are manicured and landscaped properly. We do the leasing center, we do our model suite. We go over new signage and all the rest of it, and we change the community culture. We do that, then we start raising rents after we give to the community first.
Yes.
That means that the people that are in the building and the people in the community have more ability to be able to pay more rent. Now, if they're at like 60% of their income, it's like you start raising rents. Like you can only squeeze so much. You can only squeeze a lemon so much. There's only so much that's going to be coming out. And so for us, we don't like going into a market where it's like we're squeezing so hard, just trying to get that last little bit. It's like people have more in their pocket. They can afford to pay more. And that just makes a whole lot more sense from a business. Like, why not have the stream coming from your back than going the other way?
That's right. Yeah, exactly. That room for continued rent growth. And that's why we like to target that 30%, because we know over, a 5-7 year period, as we renew releases, we're going to raise the rent a little bit, right, to get to market. And so we know that they've got the ability to get there, which brings us really to the fourth point, which is, in the South, in the Southern United States, these states tend to be what we call red states. So more dominated politically by the Republican Party. And the Republican Party tends to be more business friendly, therefore landlord friendly. So states like California and New York, we've touched on a few times here, it's not like statewide, but like LA, New York City has a lot of rent control and eviction moratoriums from time to time. And because of the fact that they are judicial for evictions, you sometimes even just have to wait, 12 to 18 months just to get in front of the board. So for example, somebody can move into your apartment building, or maybe say your single family rental, with straight up provable fraudulent documentation, that, after they move in, you realize, oh gosh, this was fraud. And you still have to wait potentially 12 to 18 months just to get in front of the court. And the court's going to look at it and say, yep, fraud, they're out. But you've lost rent for 18 months, 12 months. And likely what's also happened is that resident has done a lot of damage to the property while they've been there. And so not only have you lost income on rent, but you've actually added expense in terms of the damage done. So in our world, if somebody moves in, and we have very stringent tenant approval, but man, with AI and technology, it's getting even harder and harder. So we've been very fortunate. We haven't had any straight up fraud yet, but it could happen. And so it's good to know you're in a state where within 30 to 45 days, I could have that person out, for that illegal activity. Even things like just leasing violations, maybe somebody's smoking marijuana in their apartment or throwing cigarette butts out the window, into the green, the green space or the breezeway. We can write them up for a lease violation. And after enough of those, we could forcibly evict the person. So if they're just not a good fit for the culture of the community, And then, no rent control, right? So our ability to bring rents to market value. I know you'll probably speak to Toronto and the rent controls there, and I know you have some personal experience with that. It's just wild to me, right? That somebody can be in an apartment for 15 years paying $1,000 below market rent, and there's nothing you can do about it. And, look, we're not trying to throw people out on the street here, but at the end of the day, what those rent controls actually accomplish is they disincentivize two things. Number one, new development, because a developer is saying, gosh, materials costs have risen. So if I'm going to be hamstrung on how much I can raise rents down the line, maybe I just won't build. And then the second thing is if you own an asset in a market like that, you're restricted on the capital you can generate through rents. Therefore, things like roofs, deferred maintenance start coming up, because you're like, gosh, if I spend money on this property or I try to renovate the unit to make it nicer, I'm going to be limited on how much I can rent. So, it's not to say they become slums or whatever, but you can see how that could occur over time where if, you're not getting the capital coming in rent to actually improve the asset, it's going to stay in its present condition. So it actually creates, I would say, subpar living conditions as well as a byproduct of rent controls as well.
Yeah. Well, yeah, in Ontario specifically, there was a rule change in 2018 that anything before 2018, there's rent control and you can't raise rents. Now, anything after 2018, you can raise market rent. But the problem is if you have a resident or a tenant that stops paying, you just try to evict them. 12 to 18 months. So you're screwed one way or another. Now, 2018 or older, that market, I'll share a quick story, John. I've shared this before on the podcast that, we have one tenant, one resident. It's a eightplex. And we have 7 other units that we've renovated that we're getting 1700 per month. And the one tenant is paying $650 a month. And we've offered him $30,000 cash for keys to get him set up in the next, we want to be fair about it, 30,000. And what was interesting was his comment on what he said. He's like, I am not going to be moving. First, he said it in more of a, we'll say, more direct way, John. We'll just leave all the
maybe a little colorful.
Yeah, colorful. Sure, a very colorful way. And then it was like, I'm not moving out for $1 less than $100,000.
Wow.
It's like goes back to the Austin Powers movie. It's like 1 million kajillion billion dollars.
Exactly.
Right? And it was like, what? He's like, yeah, 100,000. We're like, so it was a property manager that did that, and they passed the story along. But I just, that's good context that our business plan, we would never do our business plan in Ontario. It just, or like in any market that had rent control, because it doesn't allow us to go in and have this approach of build up the community, spend money on the community. But at the same time, we have investors that we owe our allegiance to as well to make sure that we get a really good return. And so we don't see it as like a win-lose with our residents. We see it as a win-win. We see it as we're going to come in and give you first. We're going to take the first step in the relationship, and we're going to come in and add a lot of value first. And then once we do that, you're going to see, okay, the communities, you're spending money on it. And, the feedback that from what we've seen with when we go into our communities is they have, it's well received. And the big part of that is the relationship that's been built with the new property manager, that they realize, listen, this is more of a rare community, and I see the value in that, and I want to stay. And I know I'm paying a little bit more of a premium, but it's worth it, and I see the value in it now.
That's right. No, that's great. It's such a crazy story, though. $100,000 to move, right? I mean, you can't make that up. And the fifth reason,
John, by the way, he's smoking in there right now, and we're trying to evict him on that. And we can't.
There you go.
He's like, trying to get him out, because even though he's smoking, it's like we're serving notice, and but that's in addition to everything. So not only paying $1,000 under, he's smoking, and so that's what we're dealing with there. Whereas in our market, it's like that would be, they'd be evicted. He'd be gone like years ago.
That's right. That's right.
Yeah.
100%. Well, the fifth reason on the Sun Belt is really, something we've kind of touched on, but the favorable weather, which really leads to a higher quality of life. So, for example, where I live in Atlanta, a half mile from my house, there are 16 miles of walking and jogging trails, and it's been cool because all the cities in the South in Metro Atlanta have been doing this, and now they're starting to link them together. And so, a lot of parks, and it's year round, right? I mean, yeah, we get some colder weather in the winter here, but maybe we get a day's worth of snow here or there. So, kind of 365 days a year, just throw your jacket on, you can be outside. I love to hike in the North Georgia mountains. So in fact, I like actually doing it in the colder months with a jacket on and, doing a strenuous hike and just warming up that way. And so all that lifestyle, is attracting the population. But what we've also found, and the studies bear out, is just lifestyle driven tenants tend to stay longer because they love the area. They're not there just because they got a job transfer there. They're there because they like the sun. And so Florida, it's the beaches, right? Atlanta, it might be just the great weather and, the outdoors. Atlanta is a very wooded, heavily forested area. So it's just very beautiful, and just people like, being outside. We have a lot of festivals really from March all the way through, October. Almost every weekend there's something happening in the city. A lot of great sports teams down south. And so, there's just a quality of life that I think is really driving a lot of the in-migration. But once again, it keeps people here longer. And so that's what we really like. So it's not a market where, I'm in this market because that's where my job is. They're moving here very strategically and specifically for that lifestyle. So those outdoor amenities, the community features, it means people are happier. The happier they are, the more likely they are to stay. And so, that affordability, but that opportunity all combined. So, it's to me, look, there's some opportunities, say, for example, in the Midwest. There's some very, interesting markets like Indianapolis, Ohio. There's some great job growth there. People are moving there. But for us, it just goes back to that lifestyle that the South offers, I think, is what keeps people here longer. And that's why we're big believers in the South when it comes to investing.
Yeah, and tourism brings, the amount of money that brings into all the businesses, and then there's the tax base goes up. And, that's why a lot of these states, they offer really low taxes, low state income tax. And so, even when you go and buy something down here, it's like 7% sales tax, whereas, say, in Ontario, for example, it's 13%. So, and that just kind of sprinkles down throughout, is when that tax base is higher and tourism's coming in, it just brings more money to the state. And, that gets passed down to the properties and the owners. And you even have a guy like DeSantis. So he runs Florida, and he's talking about actually removing property tax, period. That's what he's talking about right now. So I'm like, go DeSantis. Yeah, we like that.
No doubt. No doubt.
So,
and there's a few other little things, in the South, and I think it's worth mentioning. But, majority of major Hollywood productions are now filmed in Atlanta. North Carolina has a tax incentive for Hollywood productions. And so, for what it's worth, that actually kind of creates like a excitement, right? And so people want proximity to that. We have big music scene here in Atlanta. And so, there's just, you got the culture, you've got the arts, you've got the weather. Charleston, you could literally, I would tell anybody listening to this, especially a Canadian that hasn't yet carved out a vacation in Charleston, you might be thinking Florida. And I know, to your point, Mark, maybe Canadians right now aren't really thinking about coming to the U.S., which I think is understandable. But come to Charleston. It is an amazing city, just full of history. I know when you were there for the first trip, you did like the full tourist experience and did the tour and all that. But, it is just a beautiful city, incredible food, incredible culture, incredible music, and just a beautiful city all around. So great place to spend a week with your family and just explore and, eat some chicken biscuits with honey drizzled all over them and all that good stuff.
So, John, talking about that, when we were saying, okay, we'd like to go check out Charleston. We like that as a new city to invest in. I went in on one of those tourism buses there. So I was like, I walked on. I was like, buddy with the tour guide and sitting at the front, and And it was good. It was a good tour. I think I was the only one that had that wasn't full white hair. They kind of looked at me like I was like this oddball coming on, asking all the questions to the tour guide. But you'd be surprised what you learn when you start actually. You talk to people that have been there for a number of years. This is what they do, and so that was really good context for me. Of what the city has to offer, and you get to see kind of the things that you just maybe you wouldn't get when you're on your own. And so that's kind of the depth and the research that when we go into a new market, like we want to know what is like the heartbeat of the city, and is that a market that is, because when we go in a market, it's not like a 1 year thing. Like this is going to be a long term relationship with the city that we're going into. And so we want to make sure that we get it right. And that's why we do a lot of our research. And that's one part of it.
Yeah, that's it, man. It's a very thoughtful, in-depth process when we make that decision. And just to wrap it up, yes, we like, say, Atlanta, we like Charleston, but it's important when you're investing, you got to do your homework on the actual neighborhood, what we call the submarket. So Jacksonville, I'll use it as an example where there are pockets of Jacksonville that because the population exploded, development exploded. And so there's some areas where there's some pretty negative rent growth because just so many new units came online and they're being absorbed, but it's just going to take a couple years to cycle through. So you can't just say Jacksonville, but you have to say, well, gosh, this submarket of Jacksonville still has those strong, the factors that drive growth. So actually, where we have a co-general partner investment is a great example of that. That area is still seeing strong growth. Things are being absorbed. So it's not to say just Tampa, right? It's like specific pockets of Tampa where all these things we've discussed are present, but we also have the local, hyper-local, I should say, drivers, in-market population growth, average median income, low crime. I mean, effectively, we kind of look for no crime. Like when I say that, every area, I mean, you go to the nicest area on planet Earth, there's going to be a certain amount of, I hate to say it, but just like domestic violence, drugs, DUIs, just those kind of more, I don't want to say misdemeanors, but like lower level stuff. But if we see gunplay, we see, drug trafficking, we're like, not for us, running away.
Yeah.
So we're checking the crime very specifically in the area. And then we're looking at schools, of course, too. So for what we want to see is schools that are at or above the state average, right? And so all these factors are combined to make this decision. So it's not a blanket over the South. It's like, this is where we start, and then we drill down into those specific submarkets and try to find those areas that are primed for not only population growth, but just rent growth and all the things we've discussed.
Yeah, right on. So what does this mean for investors? This just means that when you put $1 into the real estate market, there's higher probabilities that your investment's going to go up more than if you invest in a city or a neighborhood that doesn't have that same, we'll say, the same dynamics or the same ingredients for that market to go up. And so we're just playing a game of doing our research, letting the data tell us. And the cool thing is that history tells us that you can predict a market going up. And if you can get in early, your returns can be substantially more. And so for me, I realized that I was in a market back in 2008 when I started buying real estate that was high appreciation and it was cash flowing as well. And then it got to a point where it was no longer emerging. And so what I realized is there's always an emerging market somewhere. And so that's in the real estate investment firm, this Faris Capital, our jobs are to find the emerging markets on behalf of our investors and the pockets that have the most amount of upside. And that's one part of selecting the investment. And so this means higher returns. And higher returns is based on buying affordable places that will eventually become unaffordable, and then we'll sell those assets. And so when people are moving in, higher rent growth happens when more people move in, more jobs move into an area. You're not restricted by adverse landlord controls as well. So your risk actually goes down quite a bit. And so this is just, you have the current at your back in the right markets. And that's where we want to invest long-term. That's where we're going to have less oops and more, here you go, here's the returns as expected, and we're overshooting them. That's what we want. And that's what all the research and everything we do is all to make that happen.
Beautiful. Well, just to kind of summarize, population and job growth are supercharging the Sun Belt. That affordability, the pro landlord laws you just touched on, are attractive to us as investors. And, now's your time to plant that flag in a high growth area.
Right on, guys. Well, thanks for listening to the show. If you enjoyed it, please subscribe and share with other high net worth investors that you think will benefit from it. And if you are interested in learning more, go to fulloutinvesting.com. You'll find out our 10-step investing process, and you'll see a sample deal on that as well. And you can actually book a one-on-one call with John and myself and find out a little bit more if we could be the right fit or not. We love and believe in you guys. Keep dreaming and investing big.